Welcome back to Investing Talk podcast. Today we're tackling a question that's probably on a lot of your minds. Is Dragonfly, the drone solutions company, actually a good buy right now?
It's a really interesting one. We've gathered some fascinating source material to help us unpack this.
Yeah, definitely. And hey, if you find this discussion helpful, please remember to subscribe, like, and maybe leave us a comment. It really does help us bring you more analysis like this.
Absolutely. And if there's a specific company you're curious about, just drop it in the comments. We do look at those.
Okay, so Dragonfly. They've been making headlines, drone tech, defense, commercial sales. It feels like they're everywhere.
They are hitting a lot of the right notes, for sure. But like any innovator, especially in a hot sector like drones, the pictures, well, it's complicated.
Right. On one hand, you see this impressive growth, some really bullish analyst ratings coming through in our sources.
But on the other hand,
Yeah.
yeah, you dig a bit deeper, and there's some pretty clear financial hurdles.
Yeah.
And the technical signals, they seem to be pointing in different directions.
It's a real mixed bag. So let's try and piece this together for you. Okay. Let's jump into the recent activity. Our sources show a lot going on with Dragonfly lately. What's been driving the conversation? What are the headlines telling us?
Well, what's really fascinating here is how Dragonfly-specific news lines up with the bigger picture in the drone industry. For example, their Q2 2025 results. They showed a 37% year-over-year increase in product sales.
37%. Wow, that's substantial growth.
It is. It's a strong signal. And it's not just potential. They announced a concrete sale of heavy-lift drones to a Fortune 50 telecom company. There's a big commercial win.
Okay, so real-world application, not just talk.
Exactly. And beyond Dragonfly itself, the whole market is, well, booming. Projections are showing the U.S. drone land surveying market could hit like $14 billion by 2030.
$14 billion just for surveying.
Yep, and that's driven a lot by government use cases. Then you've got the drone as a service market even bigger, estimated to reach maybe $27 billion by 2033.
So the overall tide is definitely rising here.
It sets a really promising backdrop for, any company playing seriously in this space.
And it's not just market size, is it? I saw something in the sources about regulations, often a big hurdle. The U.S. Department of Transportation looking to ease line-of-sight restrictions. And even the Secretary of Transportation, Sean Duffy, posting on X about jump-starting innovation. That sounds pretty significant.
Absolutely. Those regulatory shifts could be major catalysts. I mean, think about it. Easier rules could unlock tons of commercial uses. It's also worth noting Dragonfly has been showing up at some high-profile places, like showcasing UEV solutions at a Pentagon event, LUCAS.
Okay, so they're getting in front of the right people in defense.
Seems like it. And demonstrating an integrated tactical strike system at another invite-only Pentagon thing, it suggests they've got some perceived tech strength and strategic positioning there.
But it's not all smooth sailing, right?
Yeah.
I think I saw mention of supply chain issues.
Yeah, that's the flip side. The sources mentioned a drone part supplier delaying orders because they couldn't get enough rare earth magnets.
Ugh, magnets. Crucial for motors, right?
Crucial. So that little detail signals potential supply chain risks that could hit anyone, including Dragonfly. Even booming markets have bottlenecks.
Okay, so that brings us to the financials. And this is where, like you said, it gets complicated. We've heard about impressive sales growth, exciting market trends, but our sources highlight a really crucial point about Dragonfly's financial health. What's the reality behind those revenue numbers?
Right, here's the tension. Despite that strong 37% year-over-year product sales growth in Q2, Dragonfly is currently operating at a loss, a significant one.
How significant are we talking?
Well, projections estimate their 2025 earnings will be around negative $9.6 million.
Oof, okay, so growing sales but losing money.
Exactly. And that's critical for investors. Sustained operating losses mean they likely need to keep finding cash somewhere, either external financing or issuing more stock, diluting existing shareholders.
So they need fuel to keep the growth engine running.
Pretty much. They're burning cash to grow, which raises the big question.
How do they keep innovating and growing while losing money?
Yeah, especially because the drone sector is super competitive. You've got bigger players with deeper pockets.
Right, established companies.
So that puts pressure on growth stage firms like Dragonfly. They need to win contracts and manage costs and somehow find a path to actually making money.
It's a tough balancing act. Growth is great, but if it doesn't lead to profit eventually...
It comes with significant financial risk.
Oh.
Exactly.
Okay, so with this backdrop, exciting growth, but persistent losses, What are the experts, the analysts, saying? How do they value this company?
The analyst sentiment we found is actually quite optimistic.
Hmm.
Two analysts cover the stock and both rated a strong buy.
Strong buy, no holds or sells at all.
Nope. And their average price target is $6.50, which, compared to recent levels, suggests something like a 60% potential upside.
60% upside. Okay, that sounds very bullish. But based on what if they're losing money?
And that's the key question, right?
Yeah.
It makes the valuation feel, well, speculative. Standard metrics like PE ratio are meaningless here. You can't calculate it with negative earnings.
Right.
So these bullish targets, they're largely based on expectations. Expectations of continued rapid growth, future contracts, potential future profitability.
It's a bet on the future, not the present financials.
Precisely.
Yeah.
It's not based on current operational strength.
Yeah.
And look at the stock's trading range over the past year, went from $1.55 up to $7.31.
Wow, that's a huge swing.
Yeah, it really underscores the speculative nature and the inherent volatility. Hopes can drive it way up. Reality can pull it back down.
Okay, so analyst optimism on one side, based on future potential, but current losses on the other. What do the technicals say? The charts. Dragonfly saw an 8% jump recently, which sounds good.
Yeah, that 8% jump looks nice on the surface.
Yeah.
But when you dig into the technical indicators in our sources, it gets really interesting because the signals are just all over the place.
Yeah.
Very mixed.
Just how?
Well, for instance, one AI algorithm we saw, Intellectia AI, it actually flags Dragonfly as a strong buy candidate right now. It projects strong performance in the very near term, like days or weeks, based on positive signals it sees.
Okay, so one AI says buy short term.
But if you look closer at the broader technical signals from the sources, Dragonfly has 3 buy signals and 3 sell signals,
Perfectly balanced.
pretty much leading to an overall neutral outlook in the midterm. You've got bullish signals, like the stochastic oscillator in RSI suggesting it might be oversold,
Right, momentum indicators.
and the price crossing above the 5-day moving average, short-term bullish. But then you have bearish signals too. The awesome oscillator, momentum indicator, the MCD, they're pointing down.
So the charts are basically shrugging. No clear direction.
That's a good way to put it. It screams uncertainty and likely volatility.
So what does that mean for someone looking at the stock right now, if the technicals are so contradictory?
It means volatility is pretty much baked in. The stock has a high beta, 2.54.
2.54. Explain that quickly.
It means it moves, on average, about 2.5 times as much as the overall market. So if the market hiccups, Dragonfly could, really tumble or spike on good news.
Gotcha. High risk, high potential reward baked into the movement itself.
Exactly. And while the overall moving average trend might lean slightly bullish midterm, those new-term AI price predictions we mentioned, they actually forecast slight declines.
Wait, the same AI that called it a strong buy candidate?
Yep. It predicts $3.99 in a day, $3.93 in a week, $3.96 in a month. All slightly lower than where it might be trading.
That highlights the conflict perfectly. Analyst optimism, short term, requires a strong stomach and a long time horizon.
Definitely. And adding another layer, short selling activity has been rising. The ratio is up to 28.7%.
Meaning quite a few traders are betting against the stock.
A significant number, yeah, suggesting they anticipate further declines. It's a strong counter signal to those bullish analysts.
Okay, one more factor, seasonality. Does the time of year matter here, according to the data?
Apparently, it might play a small role. Historically, April has the highest probability of a positive return for Dragonfly, around 50%.
Okay.
Whereas August, for instance, historically only has a 20% chance of being positive. So yeah, even the calendar adds another little wrinkle. But obviously, that's just historical data, not a predictor.
Right, just one small piece of a very complex puzzle.
Okay, so boiling all down, based on everything we've seen in the sources, Dragonfly clearly fits that high-growth, high-risk profile, doesn't it?
Absolutely. You've got the strong sales growth, the innovation, the bullish analyst takes.
But it's heavily weighed down by those persistent operating losses, the uncertain cash flow, and clearly a lot of volatility.
Yeah, the potential is there, you can see it, but the financial foundation seems shaky.
Right. The valuation, as we discussed, feels very speculative. It's built on hope, future growth, future profits, not current strength.
And the risks seem pretty substantial. You mentioned continued losses, potential dilution.
Exactly. Every time they might need to raise capital by issuing more stock, existing shareholders own a smaller piece of the pie. That's a real risk.
And the competition.
Intense.
Yeah.
Bigger players with more money, established relationships. It's a tough market to conquer. Plus, potential customer concentration relying too heavily on maybe 1 or 2 big contracts. like in defense.
So if a big contract gets delayed or canceled.
It could really hurt them.
Uh-huh.
So, yeah, lots of potential hurdles.
Okay, so pulling it all together, based on this analysis from our sources, what's the overall take for someone considering this stock?
Looking at all the factors, the analysis really points towards maybe a 4 out of 10 rating overall.
4 out of 10, okay.
What that means is, for certain types of people, maybe very risk-tolerant short-term traders who thrive on volatility today, there might be trading opportunities here, riding the swings.
But for long-term investors?
It's probably not recommended at this stage. Not until the company demonstrates a clear, sustainable path to profitability and financial stability. The downside risk just seems too prominent right now, despite that analyst optimism.
So, potential, yes. Proven stability, not yet.
That sums it up well. It's really a fascinating case study, isn't it? Dragonfly in this booming drone sector. It just perfectly captures that classic dilemma of investing in these growth stage tech companies. You see the immense potential, the innovation, the market expansion.
But you also see the financial uncertainty, the cash burn, the intense competition.
Exactly. And understanding both sides of that coin, those conflicting signals, is just crucial for anyone looking at investing here.
Absolutely. It really drives home the point. You have to look past the exciting headlines, dig into the numbers, understand the market dynamics. It's rarely simple. So, for you, our listener, maybe the provocative thought to leave you with is this. Given everything we've discussed, what specific, concrete milestones or changes would you personally need to see from Dragonfly?
Yeah, like maybe a full quarter of positive cash flow, or perhaps landing another major commercial contract, but one where the profit margins are clear and healthy.
What would it take to shift your view of Dragonfly from maybe a high-risk trade to something you'd consider a compelling long-term hold?
It's worth thinking about those specific trials for yourself.
Definitely. Keep researching, keep asking those critical questions. Well, thank you for joining us for this look into Dragonfly. We hope this discussion, drawing on all these different sources, helps you make more informed decisions.
We hope so, too.
We'll be back soon with another detailed analysis for you.